Hi, this is Hyperwave. Good morning, afternoon, kind of. It depends on where you guys are in the world. And this is gonna be a really fun one. So first of all, happy Friday. So we are gonna have a bit of a fireside chat based on kind of things that Tyler and I have been talking about for months and months and kind of from the beginning, and especially more recently since we completed the Hyperwave. Definitely in regards to the piece that was just published and kind of just have fun chatting about all of it. As you saw in the title, it's really why the technicals and fundamentals are converging right now and creating this bear market, but also just what's going on in the crypto world and what this means for Bitcoin moving forward. So, without further ado, Tyler, what do we mean by the technicals and fundamentals converging right now, and how is that creating a bear market?
Yeah, I've been thinking a lot about the Medium article that Leah wrote. I guess it's been a couple of weeks now, because it encapsulated a lot of very important concepts that we have been talking about in our vlogs, but also that we spend a lot of time talking about just between us and with Tone Vase and other people, trying to understand what the heck is really going on. It's very difficult in a brand new asset class to be able to encapsulate what is important and what is not important. And depending on your perspective when you come in, who told you about it, what you read, what your preconceived notions were, what you've learned since you began looking around this space, you're going to have a different viewpoint of that overall picture of what the heck are we really talking about. And I understand that because that's true with anything having to do with investments. Tesla stock, for example, depending on what you think of Elon Musk and think of the various things that he's attempting to do and what you've read about it, if you've looked at the stock or haven't looked at the stock, if you've invested or haven't, what the media is saying about it, all of that's part of the fundamentals of Tesla. Are they making money? How much borrowed money do they have? All of that sort of thing. Who the personalities are behind Elon Musk at Tesla, who gets kicked out, who gets brought in, what sort of relationships the company has with other companies like Sony. There's a very close relationship there. All of that goes into understanding the fundamentals of what is in that ecosystem. And the same thing applies to the crypto ecosystem, but with no history. It came out of nowhere. It started very quickly. It developed almost exponentially in a number of different directions. And I'm not talking about price here. I made a list, and we're going to go through that list today of what I consider to be the makeup of the ecosystem as we sit here today. But each part of that came at a different point in time. And then it was added to haphazardly often. New people got involved in it and took it in different directions. And then all of a sudden, here we are today. And I'm saying that from the context of what Leah wrote, because what she basically said is at some point, the technicals, in other words, the hyperwaves, the sequentials, the trends in terms of bull markets and bear markets, the long term, the intermediate term, the short term, all of those and all the indicators and all the people you can hear on YouTube or follow in other ways, read Medium articles, all of those people come from the analytical side using different tools. But what are the tools really measuring? They're measuring the fundamentals of the ecosystem, not just the fundamentals of Bitcoin, but the fundamentals of everything going on, which then affect the price. And the price has been saying one thing to me and many, many other things to a lot of other people. But that's because I've got this unusual tool that I developed called Hyperwave that happens to apply to this ecosystem. It doesn't apply to 999 out of 1,000 other industries or smaller ecosystems or individual stocks, but it does apply to this very specific one. And that's why I got interested in it. And that's why Leah and I teamed up and started trying to explain as best we can what we're looking at, which brings us to today. And we're not going to look at charts today, and we're not going to talk technical analysis other than the conclusions that we have been drawing for the last year and reporting on for the last 5 months using these vlogs. I am going to refer to that, but that just gives you a sweeping idea of what we want to talk about today. And it's just going to be the two of us chatting back and forth as ideas come to us, and we'll respond to each other, or we'll not respond to each other, depending on how this thing goes. But I think it will be interesting for everybody to listen to it, because what we're going to try to do is bring the reality of how we look at the ecosystem together with what the evidence is from an investment point of view, not only the technicals, but the fundamentals, and make it a little bit easier for people to understand why we are so strident in what we have been saying since December about not only Bitcoin prices, but the prices of altcoins, the prices of ICOs, and where they ultimately are going according to the evidence, both fundamentally and technically. And I think we've needed this broad brush. And today, that's what we're going to be talking about. So with all of that, welcome. And I hope this will be interesting. And back to you, Leah.
That's awesome. So I guess start from the beginning. So as I write in the piece, it's so cool because with Tyler and with Tone, I'm learning technical analysis kind of with everybody. Actually, I think you guys are way past me because I did not come from this background, and it's just been fascinating for me of just how on point TA has been. But as much as I've studied it a bit in business school and in general, it was really new for me. So I come from a fundamental analysis background. And as Tyler said, we're going to talk about both today. And that's also because we're going to talk about why the demand is just not, it's very simple. Supply and demand. It just comes down to supply and demand. And our demand function is just not overriding the supply, which is why we're in a bear market. It's really, really simple. And so from my perspective, and it's very important fundamental analysis in traditional markets. And we'll talk about that. But also that people are coming, our investors, right, would be coming from a lot of the time traditional markets, especially big ones, big hedge funds that we want, institutional investors, big just individuals, high net worth individuals. And they're going to think in the same lens as well. Obviously, there's the excitement and then there's the FOMO and all these things, but big money, smart money is going to be looking at fundamentals as well as, sure, the TA of the right time to come in and long-term trends and what they're seeing. But that's kind of the crux of what we're also going to be talking about. So from just a background on fundamental analysis, as an example, specifically, right, I was an analyst on Asian equities. So working for a hedge fund that was heavily invested in activist investing hedge fund in Asian equities at the time. And they were the majority shareholders and would buy into publicly traded companies on the TOPIX and the Nikkei. And specifically within that, I looked very often at macro trends. Really Tyler can go into this, but You'd call me like a macro trend analyst within the discipline of fundamental analysis. So why I say that is that you look at a lot of factors in fundamental analysis. You try to value a company, okay? And you try to understand, are they undervalued or overvalued, and how can you utilize that to your gain, financial gain. But also you look at the economics of it. You look at policies, you look at politics, you look at the macro trends, you look at, right now, I was just playing around with the rupiah and Indonesian economics this morning, and how you can proxy trade. But if interest rates change and Powell says something, this affects the stock market, and you will do things accordingly. If current trade war with Trump, you will act accordingly. But also you start looking at the balance sheet, and I kind of make fun of the fact, I absolutely make fun of the fact actually, that altcoins, you don't have an Edgar report, besides the fact that they are, for the most part, they're securities, and they're illegal securities for the most part. So you really aren't able to measure the equations and run the equations and run the models and have an understanding of what these things are, right? So, if you look at the altcoin world, you can't run a quick ratio. And more than that, the valuations make absolutely no sense. It's more than that. Actually, it's disgusting. They have no correlation to their output. They should never be valued even a thousandth of what they're currently valued at. So my point in the piece regarding fundamental analysis, not TA, is that a company or person or anyone that is used to understanding how to invest from looking at the broad spectrum, because that is necessary, and understanding an industry, an asset class, a stock specifically, a company to LBO, right? We've been talking about that a little bit. This world doesn't make sense. Actually, it looks bad. Okay. So it doesn't make sense in that you can't get data. Okay. But more than that, you would stay away because it's just not, it doesn't look good. And you'd see the fact that the SEC and everybody in the agencies and the DOJ are trying to figure it out, but they haven't, right? You'd understand that this will make a big impact. So you'd stay away. You aren't able to actually calculate. Typically you use CAPM or Black-Scholes or all these other calculations. And if you're comfortable and you are usually utilize these, you can't. For the most part, you really can't. So everything that you do in fundamental analysis, just you can't do right now in the crypto world for the most part. And so therefore, the moving on to the point is, and then I'll throw it to Ty, is that there are an infinite amount of opportunities for money managers, for these people, the investors that we're talking about, or speculators, to put their money into. Infinite, right? Even if you put it in cash. So why would they put it into our world right now when it doesn't look good? So Ty, I'll just throw it back to you of a follow-up of what I'm saying.
Great. That's the essence of the article. And I would recommend everybody go back and read it very carefully, either for your first time or definitely your second or third time, because that kind of sums it up from the point of view of traditional investors looking in, or the media looking in, or regulators looking into this ecosystem. The ecosystem up till today has been living off of itself. It's been incestuous because no one on the outside of it, and it's growing quickly. I'm not saying it is not, but it's been incestuous with everybody talking to only those other people within the system. And that's the way everyone wanted it. That's what was supposedly so revolutionary about it. I think almost all of those people are now having second thoughts, because the world cannot be excluded forever, because the performance of our ecosystem is dependent on adoption. And you can't get adoption if you are incestuous. Everybody basically gets dumber and dumber over time, and then the whole thing falls apart. So I have put together a list of probably 20 parts of the ecosystem as I see it. And I'm going to give it to you on a timeline. And don't hold me to this timeline, because it's just conceptual. There will be parts that you'll agree with or not agree with in terms of when and how they occurred. So I'm not trying to say that the first thing I'm going to present created the second thing, and the second thing created the third thing. That's not the point. The point is to try to describe the ecosystem in terms of all of the parts as we see it today, and it will follow a rough timeline. Okay, the first thing is the Satoshi white paper. It wasn't Satoshi, if there is such a person or group as Satoshi. It was the white paper. That's the beginning, the genesis of this ecosystem. Now, there's quite a bit of a debate even about that progenesis of where we are today, meaning what caused an individual to sit down and write that paper. And were there others involved? Were there others that edited it, that influenced him or her or them or wherever this thing came from? And what caused that individual or group to sit and put this thing together? Now, obviously, they must have understood quite a bit about not only economics, but also about programming and about IT and about exponential growth and about viral growth, to put all those concepts together in such a short piece and have it so cogent and powerful that right out of the gate, it piqued the interest of a lot of very influential other developers and programmers. But why? Why at that time? My working hypothesis has been because of the downturn in 2007, 8, and 9 that almost brought the entire world financial structure to its knees. And therefore, they were looking for some alternative to traditional finance. I'd like to believe that's true, but I don't know that. Tone Vays disagrees with me on that point. He thinks it's more coincidental than anything else, and it was the natural development out of the tech sector, regardless of finance, that was a logical place for the tech sector to go after the experiment with the internet, meaning seeing that dramatic change can take place in economics through technology, not just making traditional economics more efficient and quicker and more programmable, but more than that, can actually introduce brand new economic wonders of the world, such as eBay and Amazon and Google and on and on and on and on. That the natural development of Moore's law and what has been going on in technology, the whole Ray Kurzweil picture of the world, just led naturally to this happening. And maybe it's somewhere in between the two. Maybe the time was right because of the 07, 08, 09 downturn, and the right person happened to be in the right place at the right time. So that doesn't really matter so much. But it's very difficult to argue that any of us would be sitting here talking and listening today if it wasn't for that white paper. So that starts the ball rolling down the hill. Next is the first Bitcoin. Not the first crypto, but the first Bitcoin, which it's a chicken or the egg sort of thing. Is that the result of the first blockchain or not? Well, yes and no, but it's simply one transaction. And yes, I guess that is a blockchain, even though there's only one transaction on it and one Bitcoin was developed. But in any case, the first Bitcoin and the first blockchain starts the ball rolling. Next comes the miners. Now, maybe the miners came before the first Bitcoin, maybe not, doesn't matter. But all of a sudden, you've got a blockchain, you've got Bitcoins that are increasing in number and eventually in price, and you've got miners making those Bitcoins. Okay, there we go. We've got the first three steps. So what happens next? Well, now you get developers, programmers, hackers, which they're all the same. Hackers, programmers, and developers are the same. Now, a lot of people like to divide hackers into black hats and white hats, good guys and the bad guys. I don't. To me, all of them are the same. They are people that have learned a skill. And depending on those people, their ethics, their morality, their view of the world, the view of themselves, their view of money, they will at various times fall into one of those buckets: developers, programmers, hackers, black hats, and white hats. But it's a group of people like baseball players. It's a group of people like chemists. It's a group of people like Wall Street money managers. In each of those groups, you've got good guys and bad guys, ethical people, moral people, and some of them are incented to change over time from one group to another. And because of that, the more of them there are, the more diverse the ecosystem is going to get. Meaning that let's assume the original developers of Bitcoin, blockchain, and protocol were all good guys. They might have been hackers in their previous life, but let's assume they were all white hat hackers trying to do good for the world rather than simply making money for themselves. That's a big assumption, but let's make it and give them the credit due for being brilliant and starting this ball rolling in terms of what we know of today as Bitcoin and the original blockchain. But very quickly, others joined the group, and some of those original developers went off and started their own projects. And some of those projects were detrimental to the overall ecosystem, but they made a lot of money. Okay, so I put them all in the same bucket. At any point in time, they might fall into one bucket or another, but over time, there are pressures on them to go into any of the other buckets. All right. But very important in the ecosystem. The ecosystem would not be here if it were not for them. So let's give them their due. Okay, next comes exchanges, wallets, traditional banking, credit cards, bank accounts, interacting or not interacting with the ecosystem. And there, once again, you've got good guys and bad guys. You've got moral ones and immoral ones, depending on who set it up, what they're trying to achieve. And then they begin interacting with the group we just talked about, the developers. They hire them. They hire them to write code to build an exchange. They hire them to write code to be able to build wallets. They hire them to have interfaces between traditional financial companies and the rest of the ecosystem, the exchanges and the wallets and all the rest. But we could not be here without them. The good, the bad, and the ugly. Then we have forks from the original Bitcoin. And who did that? Developers, programmers, hackers, plus promoters, VCs, the financial world, the traditional financial world, attorneys, CPAs, accountants. That whole group ended up being persuaded that, look, all this stuff that the original Bitcoin and the original blockchain has given us, because it is completely decentralized, other than a group of programmers that are not decentralized, but to the extent that they try to be, that is good compared to everything else that's come, in my opinion. Got together and said, look, we can just fork this thing because it's in the public domain and we've got all of the code. Let's change a little of the code and go off in a little direction, and then let's write all kinds of great marketing things about why this new direction is better than the original. And there is the birth of your altcoins and your ICOs and all of the rest of it, coming off of that simple concept of being able to basically steal what had come before it, make a couple of little changes or a lot of changes or dramatic changes and go in a different direction, and then try to describe to the public why it is better and will make them a lot of money. All right. Now, it gets jumbled at this point because now people begin talking about it within the ecosystem, and you have YouTube and Twitter and Medium and Facebook and on and on and on, where anyone can address the public and make statements and comments. And some of them are very, very good and very experienced and very smart. And some of them are not. And some of them are scammers. And you can put everyone into whatever group you want, but just know that, as in all the other groups we just talked about, it's human nature. And you can have people that are very persuasive about their abilities and what they do and very articulate, and those that are less articulate and less experienced. And over a long period of time, that kind of sorts itself out, but not really, because of technology, the ability to do this, what Leah and I are doing right now, so easily. And anyone can join, and then everyone gets to decide who they want to listen to. But that is an integral part of the ecosystem. And from that part, you get all kinds of differing opinions. And it becomes more and more confusing and difficult to sort out. All right. Then you've got chip companies, hardware manufacturers that have come in competing against each other as the growth grew and grew. Originally, we had just one Bitcoin, and that was all that was needed to get the blockchain and the mining going. But when you started getting more and more being produced, and more of that coinage, digital coinage, going out into the ecosystem and ending up on exchanges and being talked about, and people making a lot of money, people losing a lot of money on 2 or 3 previous occasions during mini bear markets, not in terms of percentages, just in terms of the dollars involved, back in 2013, 14, 15, and even earlier than that, because so many people were coming in and causing tremendous price movement that gets the fundamentals going in terms of how many miners are needed, how many machines are needed to do the mining, how many chips and what type of chips are going to go into the machines that are going to do the mining, that are going to solve the puzzles, that are going to produce the tokens or the coins. And that is an enormous industry, as are the exchanges, the Coinbases and the BitMEXs, and on and on and on. And they proliferate and they grow and they are part of the ecosystem. Now, when the developers, the programmers, the hackers get involved in the hardware, the exchanges, and the wallets, a lot of bad things begin to happen. A lot of bad things have been happening, and the acceleration of those bad things has been increasing. And Leah talked about all of that in the article. That's why that article is so important, because now the rest of the world begins looking at everything going on here through the media, through the regulators, through the legislators, through the hacks, through the problems that Leah and Tone and Giacomo and Rodolfo all report on a daily basis. My ears begin to bleed after I listen day after day after day after day to the same stories. I can't tell one from the other anymore because they are coming in such volume, in terms of the hacks, in terms of the wallets breaking down, in terms of the exchanges having big losses, in terms of all the black hats in the developing the programming world, deciding that this is like shooting fish in a barrel. This is so porous, and there's so much money and so much idiocy in terms of what goes on within the ecosystem, that they're persuaded to drop their white hats and put on a gray one for a while, and finally drop their gray hats and put on a black one. Or even worse, leave what they were originally doing as the original developers, which nobody knows how many are really working on that original stuff. I've heard numbers from 50 to 100 to 200 to 250 to 300 to 350. Meaning the core developers of the Bitcoin protocols, and going through the process it takes. I'm sure there's secret handshakes and all kinds of other things going on that we'll never know about. But in any case, what my point is, that the interaction of that species with the rest of the ecosystem has caused all of the confusion and the problems that we are now experiencing, and is being reported on by the media, and quite frankly has caused the bear market that we are now in, beginning in December of 2017 and lasting until today. Now, because of all of that, attention from the world outside the ecosystem about what's going on in the ecosystem, there are some gateways between our ecosystem and the rest of the world. And they tend to be such things as promoters and conferences and cruises and get-togethers and hangouts where people are invited to sit around and talk about what is going on and the newest things going on. But Bitcoin doesn't have promoters. It doesn't have a budget. It can't have a Bitcoin cruise and invite people and pay for speakers. The ones that can do all of those things are the ones that are not the decentralized, non-governed groups. They are the centralized, governed groups that have budgets, much of which came from your money as investors, and they took a very large portion of it for themselves personally, took another large portion of it and put it in their budgets, and then began promoting the heck to the public through that money. And it still goes on today and grows. People like Tone can't keep up with the number of them, weekend after weekend after weekend, all over the world. And he has become fairly disgusted with most of them because all they are doing is promoting new projects, inferior projects to the original white paper and Bitcoin. Well, everyone is getting punished now for where we have ended up. And that is called a bear market. And that is where the convergence of fundamental and technical analysis and the ecosystem come together, and why we're talking about it today.
It's hard to follow up on that, Ty. Anyway, I always get reverb. So just so everyone knows, Tyler and I decided not to really think too much about this nor discuss with each other prior what we were going to talk about. So I'm still absorbing that one. Maybe I'll just ask a question back, which is, in the piece, I also spoke about, which we've spoken about a lot, of the importance of historicity. And working with Tone's show and ours, people are always asking, why are you, and especially on Tone's show, why are you looking at charts from 2014 and 15 and talking about them for today, for Bitcoin? Why are you comparing these things? And then we talk about, the dot-com bubble and the mortgage crisis and learning from these experiences and the similarities and everything. But specifically for dot-com and mortgage crisis, something that we often talk about is that it wasn't stupid people, it was people who were acting stupidly. So, why is it that, no one has learned their lessons? And it's hard to, it's exciting. This world is exciting. It's confusing. I'm still trying to figure it out. I'm confused pretty much every day, but I've at least figured out that Bitcoin is king. But, why are people still questioning the importance of understanding what's happened in the past in regards to understanding what's happening now and how they should act accordingly?
Yeah, that is such an important point. When you're insulated, when you're within your own small community, you tend not to look at history. If I've heard it once, I've heard it 1,000 times in the last year, that this time is different. Crypto is different. Crypto can't be analyzed with technical or fundamental analysis. This is a new generation of thinkers. We have all the answers. We don't need any outside influence. It's going to act completely different than anything else has acted before. Now, there is no better definition of ignorance than any of those statements. You feel good when you say it. You feel strong. You feel virile. You feel like you're on top of the world, but you're being a fool. Everything is connected. All financial asset classes are connected by history. All of them can be studied fundamentally and technically. And that will be true as long as humans are on this earth. When you become insular, when you isolate yourself from reality, and all stand around in a room with pom-poms, jumping up and down, it feels good. It feels exciting. It feels like you're on top of the situation. That is sophomoric. That is jejune. That is every possible word that can be used to describe childlike action is what that's all about. But you're not the first to do it. You, meaning all of us in the ecosystem. Every other innovation has the same reaction. It's a natural human reaction to think that, look what we have come up with, and we're the first in history to be able to change everything just with these very simple procedures. So history teaches us so much. Warren Buffett uses one very, very simple set of fundamental rules. He does not use technical analysis. He does not believe in growth type of investments. He believes in value and deep value investing, which has been taught for the last 75 years. And it works. It works fabulously well. But to assume that that is the only way and the best way to invest, if you're anyone other than Warren Buffett, is silly. And that is most obvious with his most recent capitulation in terms of buying technology stocks, which do not have any of the characteristics of what he believed to be true about the only way and the best way of investing. But it became so obvious that he was wrong that after years and years and years of not being able to even do better than he had always done, which was spectacular, he is thrown in the towel and is making enormous investments in things that have already gone up thousands and thousands of percent. And he's probably completely right in making those investments today. But if he had not been so insular over the years, he could have been in those same things 15 years ago. So what my point is no matter what you believe is the truth and the only truth, you are wrong. And you need to expand your thinking, your consciousness, your mind to accept all other alternatives. And this group that we're talking about today, the crypto ecosystem, is being forced to do it. It's being forced by market forces. It's being forced by the reality of others coming into the space, looking around and making fundamental and technical comments about what they see using very, very powerful tools. And it doesn't matter if you personally resist that. It's going to change everything, as it always does. So great point, Leah, great point.
So as a follow-up of what you're saying about Warren Buffett, absolutely true. So he's just following up on Ty. So he's a value investor, and when he finds the right company, he is believing in a long-term value investment. Now the news will pick up on that. Usually the stock price will rise quite quickly. And therefore, it can sometimes be a perpetuating system. Now, what that is an issue also in our space, on the reverse side, is that all this bad news that we've been talking about, that Tyler's been talking about, of all the hacks, of all the news repeating itself, and negative news, is that the space, the media, everybody, for the most part, the public is unable to differentiate Bitcoin from, I won't say the S word on this show. I'll save it for tone. The altcoins. And therefore it's being lumped as crypto, as one. And as long as that keeps happening, then the public is not going, and everybody else and all these people who we're talking about, and especially the media, is not going to be able to, again, just make that differentiation that is absolutely necessary. And at this point, statistics have said and just come out, Bloomberg came out with a couple of reports I cited, where half of the altcoins have already gone to zero. So on top of, all this negative news of the hacks and just crappy exchanges and, just bad scammers and everyone involved in this space that's just making it a mess, you have these coins that are going to zero and no one can differentiate. So, again, just specifically, if Warren Buffett is investing in one company, he is making a very specific decision, and the media says Heinz is going to be great, etc. But even when, and especially the VCs, I mean, Tyler mentioned that CPAs, the VCs, the marketing, the promoters, that everybody who's getting involved in the space, they're investing in these alts and crappy blockchain projects that are complete fugazi, they're just even more confusing the space. So until this space gets cleaned up, and hopefully soon, then again, the fundamentals aren't making sense, and you should stay away, because you can't differentiate Bitcoin, but also just everything you hear is just, for the most part, is pretty poor. So that was just a bit of a follow-up of what you were saying. What do you think?
Well, yeah, that's the whole point of what we're trying to say today. Is we could just say that Bitcoin and all the altcoins are in a bear market, and here's a target where we think it's going to go. But we've been saying that. What this is today is we're trying to say why. We're trying to give some perspective on what we see going on and what it means for the future. And the future is very, very bright. I wouldn't be spending all of my time trying to understand this ecosystem, because there's plenty of other things out there that are doing wonderfully well. But this one really intrigues me, going all the way back to the original white paper. I believe in what Bitcoin is doing. I have great doubts about all of those other projects, but not great doubts about blockchain, which is different. I do think that there will be tremendous usage for blockchain, but a lot less than is being proposed. Maybe 1 out of 10, maybe even 1 out of 100 of the things that we read about will actually bear fruit for fundamental reasons, because they're not needed. Blockchain is not needed for so many of those projects, but it is the right thing to say at this time to get attention. And that's a different question. And I'm not sure which is the more powerful of the two. The theoretical basis of what Bitcoin is and stands for, and where I believe it will get in the future, which is a bigger and bigger portion of the macro financial pie over time, just not right now. It's getting less and less every day that goes on since the December peak. And that's one of the things we follow using technical and fundamental analysis of where it is in that cycle. And you know where I stand on that, that we are in a bear market. We're not at the end of the bear market. It's going to take more time, but we're trying to explain today the fundamentals behind what is causing all of this nonsense. And I think it's very simple. I mean, it's difficult to talk about and pull all the pieces together, but just in my short lifetime relative to financial history, I have experienced a half a dozen, probably closer to a dozen of these situations, the Bitcoin crypto ecosystem situations that we are now looking at. One way I think about it is in terms of hyperwaves, because hyperwaves tend to appear when major shifts are taking place, or when some new security type comes along or new asset class comes along that gets everybody excited. And then the development is very similar to what we've seen with this particular ecosystem. Let me just give you some very quick examples, starting with gold and silver, inflation and interest rates. All of those things put together are an ecosystem. It's a way of looking at macro financial history. And in Saifedean's book, he talks a lot about that, but not in the context I'm talking about it right now. What I'm saying is those things, let's call them gold and silver as precious metals, excluding all the other either rare earths or palladium and platinum. Let's just talk about gold and silver. You can throw in there copper if you want to, because it played the same role in a much smaller, to a much smaller extent over the centuries and the millennium. But gold and silver played a very important role, and that role began to shift in the 1800s, and then dramatically in the 1900s. And you had things happening, for example, after World War I with the Weimar Republic in Germany, where paper, fiat, Deutsche Marks, and gold and fiat money versus hard money came head to head, and hard money always wins. In recent years, what we're seeing in Venezuela, what we're seeing in Zambia, the old Zambia, what we're seeing in various places at various times shows that hard money or real money relative to paper money always loses. Well, in the 1970s, when I got started in this business, in 1975, when I officially got into this business, we were right smack in the middle of a 1971, 4 years before I got into this, and 1980 peak, 5 years after I got into this. And I understood immediately what was going on. OPEC, using commodities, which is another way of discussing hard money. Oil is a hard money. It is converted into fiat money, but it's basically traded around the world using US dollars. And US dollars up until 1971 were backed with gold. So all of that picture fits together. But what happens is when things begin to break apart, such as in 1971 when Nixon closed the gold window, a bunch of things began to happen. And there were all kinds of outside pressures having to do with interest rates and inflation at the same time. That had nothing to do with closing the gold window. It had to do with the war in Vietnam, John Kennedy starting to run deficits for the first time in our history other than wartime, and those deficits and debts becoming part of the natural growth of this country through the legislature and through the US Treasury and through the Federal Reserve. And since 1960 and 1961, all the way up till today, it's gotten worse and worse and worse and worse. That was primarily what caused Nixon to do what he had to do in 1971 because of pressure from the rest of the world about our inflationary tendencies. That had already started long before Nixon closed the gold window. And it started long before the price of gold went from $35 up to $800 during the 1970s. And it happened long before OPEC got its act together as a group and began to have a monopoly on oil, and oil prices soared. And therefore prices of everything soared. And therefore inflation increased during that period of time. All of that is an ecosystem with various players doing various things, and you can chart it, and there's fundamentals behind it. And it ended the way all of these things end, in a horrible bear market for all parties involved: stock markets, bond markets, people with savings accounts, people with retirement accounts. The price of gold peaked, the price of silver peaked and dropped for 25 years. The price of oil dropped. OPEC began to deteriorate and is still deteriorating. The whole energy sector of the US, depending on who was backing it from an administrative point of view, was either drill, 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 or it was all of these horrible people are polluting the world, and we've got to stop all of that. That's all part of the ecosystem, having to do with that one 10-year period where I started in the business. Right after that, in the period of the 1970s, we had in the 1980s, we had a new hyperwave and a new bubble begin to develop, and it had to do with junk bonds. And you remember some of the names like Michael Milken, Boesky, and everything that happened there, which resulted not only in a hyperwave in junk bond prices, but also in the US stock market, which then peaked in 1987 and dropped 22% in one day. And people say, well, the two have nothing to do with each other. They're absolutely have exactly the same to do with each other. Everything having to do with junk bonds, with tax shelters from 1980 until 1990 were part of a bubble that then burst and then started other bubbles. The next one was the tech bubble, a hyperwave. Throughout this whole period of time, 1970, 80, and 90, there was a gigantic hyperwave or ecosystem that was occurring in Japan, causing the Nikkei and all the Japanese banks and all the real estate and all the corporations and the 10 largest banks in the world were Japanese in the late 1980s, because the ecosystem in Japan fostered all of that to happen for good and for bad. There was tons of manipulation at the corporate level, at the government level, supporting each other's prices, driving prices higher and higher. At one point, the real estate value in Tokyo alone was greater than 3.5 times all the value of all the corporations in the United States. That's a bubble. And what happens for the last 30 years, it's all been falling. Their stock market, their real estate, their stature. The Chinese have taken over their spot as number 2 in the world. There are two sides to all of these. There's the upside, the good side, the fun side, the pom-poms in the room, jumping up and down, all the promotions, all the cruises, all the conferences, all of that stuff. And then you pay the price. That's where history comes in. Expand your minds and understand that, and it becomes very simple. It becomes very easy. But you need to let go of your proclivities to only hold on to certain facts and not expand what you are thinking about. Following all of that, we had the NASDAQ bubble, which is almost the perfect hyperwave, and allowed us to predict precisely when it was ending, and to avoid, all of the downturn for the next 3 years and all of the confusion, same as we're seeing with the alts and the ICOs today. No difference at all. And Leah made that very clear. That's the right example for understanding what is happening with us right now. Now, that doesn't mean that all of technology was destroyed. That doesn't mean that all of Japan was destroyed. That doesn't mean that OPEC and oil producers were all destroyed. It simply means you go through these cycles and recognize them for what they are and take advantage of them. That's what true investing is all about, both fundamentally and technically. So sorry for that rant, but I think it fits in very perfectly with what we're trying to express today.
Thanks, Ty. So I guess the last thing I wanted to say today that kind of capstones it for me is, based on what you're saying right now, is my example of working in change management consulting and with the World Bank. So as Tyler knows, since I've been 19, I've worked at the World Bank, for the World Bank on contracts, and then also within a capacity where I worked for a brief stint of time in a change management consulting company, specifically for management consulting, but change management, where I was involved with a reorganization of one of the World Bank's departments with over 1,800 people. And with reorgs, I learned just how scared people are of change. And I think at least what I saw was also that this comes down to this deep-rooted fear of sounding and feeling stupid, kind of ineptitude. And people losing power, feeling like they're losing power. And again, Bitcoin, both Tyler and I believe has the brightest of futures. but that there's a lot of things right now that are hindering that beautiful future. And it reminds me of the blind man and the elephant example, right? And you have the blind man holding the elephant's trunk, and he believes that, it feels like a snake. Okay. And the same, can be said of the blind man standing next to the leg who thinks it's a tree, right? And the two men arrive at different conclusions because they have different information, and they aren't able to see, the whole spectrum. They're not able to see the greater picture. Okay. And I think that also comes down to facts, stories, and beliefs, right? And how different all three of those are. And beliefs shape the facts that we listen to. I mean, this is all things I learned while there, really. And the stories that we tell about them. And debating facts and stories is futile when people's underlying beliefs are misaligned. So the final part of that is, I think that leads to fragmentation, which I think is in alignment with what you were talking about earlier with your different timeline, which is, I think fragmentation usually happens at the worst possible times, and it's happening now because there's just, there's so much development and it's so incredible, and Bitcoin could just be, light years ahead, but we're so fragmented. And, after that initial excitement of an inspiring vision and strategy are revealed, and, and it's amazing, there's groups that begin to question it and, revisit like what's at stake with them, and then fork and create these alts, and and they have their own visions, and it fragments absolutely. And then you can't have cohesion. So to wrap all that up in a bow, I just think that, one, no one's seeing the bigger picture right now, that we're talking news stories, as you said, every single day that sound the same, of hacks, of, exchanges breaking, of all this ICOs, of, DOJ coming down, the SEC not understanding but trying to, etc. And no one's looking from up above. And then because they're hearing all these stories, people are scared by what they're seeing, and therefore they're really being, listening to and believing in their beliefs, which are shaping those facts. And that is what's being funneled into the media. And therefore, again, we're not able to see this bigger picture because they're just, taking what they're hearing as these beliefs, which are not, based on a lot. Well, there's facts there, but it's these stories, these narratives that are being created, again, of the whole space, not Bitcoin as differentiated. And then what it's leading to is this fragmentation, which you can't come to cohesion on. And without cohesion, you can't move together as a team. And until we can move together as a team supporting Bitcoin, I think we will remain in this bear market until we can figure out exactly how to overcome these things. I think that the space is just muddled. And as you say, I love this analogy that if Bitcoin is a beautiful boat and we have these alts, as barnacles, then, we're just not scraping them off right now. And that sounded like a downer, so I'll finish maybe on a joke or something, but just as a follow up to that, what do you think, Ty?
No, that's a great summary because it brings us right up to today. I think a lot of this fundamental stuff that we just talked about in terms of who the players are and what they're doing has to be cleaned out. And it is being cleaned out even more rapidly than I thought it was. And the SEC is going to play a big role in that, and that will get other regulators around the world to fall in line. There will always be, problems, but Bitcoin will find a bottom and begin its long, high move up that will last for many, many years at some tipping point when a lot of this confusion is eliminated. As you know, I don't believe we're at that tipping point yet. And we don't want it to happen too early. because then we've still got half the boat covered in barnacles, and it's not going to be able to do what it needs to do. We need to clear them all off. We need 99% of all the ICOs and altcoins just quietly disappearing into the night. We need regulators to understand, which they seem to, that Bitcoin is different. And we need the ecosystem to understand that and stop playing these silly games. And that is being forced also. There's only, when you have 2,200 projects with people in them, and then all of a sudden there's half as many, that means half of those people are out of work. And that means they're going to join other projects. And then you've got to cut that in half again. And now you've got 3/4 of them all looking for 1/4 of the projects. You've got to cut those in half again. And finally, you get down to a point where the people that are left are, for the most part, doing the right thing for themselves, for this vision, and for the ecosystem, and therefore for the public, and everything falls into line, and then we're ready to go. And if you can tell me precisely when that tipping point occurs, that will be wonderful. I know we will pick it up technically when it is happening, but I certainly, from a fundamental point of view, don't know. Is it going to be later this month, 3 months from now, 6 months from now, next year, at the end of next year? I don't know. But I know I will recognize it when I see it. So thank you very much for all that. I am now going to have a short advertisement. We've talked about it on a couple of occasions, but Leah and I have been spending an awful lot of time and happily and willingly sharing our ideas with as many people as we can. We have had a number of people request more intimate relationships with us, and don't take that in the wrong way, having to do with their financial situation. So we've set up a consulting program that you can learn about by going to our website, lucidfunds.com. And there's a submission form there where you can simply say what you're thinking about, what kind of help we might be able to give you on a one-on-one basis in terms of consultation. And just fill that out, because we are going to close this program down. We haven't even really started it, but we're sort of overwhelmed with the number of people that would like advice. And now we're talking the big picture. We're talking about investing, retirement accounts, options, futures, as well as crypto, putting together portfolios that make sense for you personally. We can't make those kind of comments online for a group of people we don't know, but we can help advise and make recommendations one-on-one. And we will have to be closing that down in the not too distant future, simply because we don't have the time to have an infinite number of those kind of relationships. The second thing I wanted to put a little advertisement about is we are thinking of teaching specifically in smaller groups, smaller meaning than the public in general, through vlogs, Hyperwave, Consensio, money management, other technical and fundamental things in a series of seminars. And we would like to hear from you of what subjects you would be interested in, so that we can begin putting together exactly how we're going to do it, when, where, in what type of grouping. and what kind of costs would be involved with that, not only for us, but for you attending those type of things. So you could be a big help to us by giving us information so that we can begin to decide what the next step is for us in terms of getting these words out, this word out, as specifically as we can for individuals or for small groups. And again, thank you very much for being loyal followers throughout this very difficult period in this ecosystem. I hope it has been helpful to you and continues to be in the future. We will be doing more and more of these vlogs, not less and less of them, on a number of different topics. And we'd love to hear through that submission process what sort of topics you would like to hear in these vlogs. We get a lot through the chats and through Twitter and through other things, but if you could just take the time and give us some specific ideas, believe me, we will read them very, very carefully. And with that, thank you very much. Thank you, Leah. Everybody have a great weekend.
Thank you, everybody, so much for listening. That was good fun. And I just think, to cap it off, since we love Bitcoin and want to make sure that it does rise to the moon, then I think it's up to us to make sure it does. So, call to action. Everybody, happy Friday, and thanks for listening, and have a great day.
Great. Bye-bye.